what do you believe separates a good investor from a great investor?
A great investor, well, the normal investor or speculator pays all kinds of attention to the share price, but he or she has no opinions to its value. So they're paying attention to a floating abstraction, which is to say the price. The real investor understands that the first wonder of the investing world is compounding, and compounding takes time. In a junior mining story, what you look at is, first of all, the thesis, and then the proposal by which you test that thesis, the probability of a yes answer and the value of a yes answer. But it's important to understand that to get real, true speculative returns, 10 to 1, 20 to 1, 30 to 1, you need a series of yes answers. It isn't just one. So the first unanswered question may be that you have a surface gold anomaly, and you want to determine whether that's transported or in situ. And so after doing the soil sampling, you do a trench sample. In other words, does the mineralization extend into bedrock, as an example? And that might take what was otherwise a 150,000 ounce target and make it a 1 million ounce target. And that might take a stock from, let's say, a $5 million market capitalization to a $12 million market capitalization. By the way, with certainty, cheaper at $12 million than it was at $3 or $4 million. The second unanswered question may be the third dimension. In other words, is this superficial enrichment, or in fact, does it in fact go to depth? And so, they throw a fence of 6, 7, 8 holes. And then the third question might be, okay, does this blob of rock have sufficient grade somewhere in the blob of rock that the blob of rock can be economic to produce? Now, each of these unanswered questions requires at least one, but probably 2 field seasons to answer, which means that the process of going from a surface anomaly to a reasonably good preliminary economic assessment is probably a 5-year process. The idea that you as a speculator have a time frame that is comfortable for you, which is to say 3 months, in considering the process of answering a series of unanswered questions, which would establish a valuation that takes 5 years, is not the fault of the gold. It's not the fault of the company. It's the fault of the speculator. If the speculator has unrealistic expectations with regards to time, he or she is going to be a failure.